2000 times 65 over 100, which give us 1300 naira. Traveling expenses is equals to 2000 times 20 over 100, which give us 400 naira. Incidentals is equals to 2000 times 15 over 100, which give us 300 naira. In 1975, increase in hotel bills is equals to 1300 times 40 over 100, which give us 5520 naira. Incidental increase in traveling expenses equals to 400 times 60 over 100, which give us 240 naira. Decrease in incidentals now be equals to 30 naira. Increase in total expenses is now be equals to 520 plus 240 plus that, which is equals to 760 minus decrease in incidentals, which is 30 naira, which will give us 730 naira. The annual income of a married man with 5 children is 5,460 naira. The man is allowed the following amount free of tax by the Inland Revenue Department. Personal 600 naira, wife 300 naira, children 250 naira per child up to maximum of 4. Other dependent relatives 340 naira. Life insurance 220 naira. Tax is then deducted at the rate of 12 naira half kobo in the naira for the first 2000 naira, 15 kobo in the naira for the next 2000 naira, and 30 kobo in the naira for any amount above 5000 naira. Calculate A, his annual taxable income. B, his average monthly pay correct to the nearest kobo. C, the increase in average net monthly paid if he is promoted to a salary level of 7,104 per year. Answer A. We are asked to find his annual taxable income. Allowance for the children is equals to 250 times 4, which is equals to 1,000, because he have 4 children. Total allowance is now equals to 600 plus 300 plus 1,000 plus 340 plus 220 is equals to 2,460 naira. Taxable income will now be equals to 5,460 minus 2,240 naira, which will give us 3,000 naira. Answer B. Tax on the first 2,000 naira is equals to 2,000 times 12 and a half, which is 250 naira. Remember, is equals to 3,000 minus 2,000, which is equals to 1,000 naira. Tax on the 1,000 naira is equals to 1,000 times 15, which gives us 150 naira. Total tax is now equals to 250 plus 150, which is equals to 400 naira. Annual net pay is equals to 5,460 minus 400, which is equals to 5,060 naira. Monthly pay will now be equals to 5,060 over 12, which gives us 421 naira 67 kobo. Answer C. New salary is equals to 7,140 increase in pay is equals to 7,140 minus 5,460, which will give us 1,644. This 1,644 falls within the next 2,000 naira for tax. Tax on 1,644 naira is equal to 1,644 times 20, which will give us 328. This increase in annual net pay is equal to 1,644 minus 328.88, which gives us 1,315 naira 20 kobo. Increase in monthly net pay will now be equals to 1,315 naira 20 kobo over 12, which will now give us 109 naira. Value added tax or duty. Another tax to raise revenue in some European countries is value added tax. This requires that when anything is sold, a certain tax is added to the bill and has to be paid by the purchaser. When any bill for service, example solicitors work, is sent, a certain tax is added which again has to be paid by the customer. Some essential goods such as food are zero rated, which means that no tax is paid when they are sold. Such items such as petrol has an extra large value. The tax VAT. Import duty and excise duty. Duty is levied when certain goods, principally wine, spirit, perfume, and tobacco, are imported into the country. This used to be one of the main sources of tax, though smuggling reduced the amount of duty that was actually paid. Excise duty is charged on goods manufactured locally. Question: a bill for goods is 22 naira. To this must be added import duty at 8%. Find the duty and the total bill paid by the customer. Answer: 8% of 22 naira is simply 8 over 100 times 22, which will give us 1 naira 76 kobo. So the duty is 1 naira 76 kobo. The bill paid by the customer is now equals to 22 naira plus 1 naira 76 kobo, which is 23 naira 76 kobo. Question: the duty on a bottle of wine is 25 kobo, and this is 40% of the cost of the wine in France. How much did the wine cost? Solution: 40% of the cost is 25 kobo. So 100% of the cost is 100 over 40 times 25 kobo. That is 62.5 kobo. Question 11.